It seems like every day we hear about how interest rates are at historical lows. It's true. Rates have been historically low for a while now. But we have actually become very spoiled. It seems like we expect that these great rates will just last forever. If you look at a history of home loan rates, you will see that we are, in fact, living in historical times. This graph that we are currently looking at is available at gormanblog.com. The graph shows the average 30-year fixed rate since 1971. You can see that there was a huge spike in rates in the 1980s. Rates actually shot up into the double digits. During the current economic downturn, the U.S. Federal Reserve has made a huge effort to ensure that rates didn't do that again, and so far it has been very successful. As you can see, the normal range for interest rates falls roughly somewhere between 6% and 12%. But by looking at this graph, you can see why most experts agree that rates really have nowhere to go but up. Now, I want to show you exactly how much you could save or lose by waiting to purchase or refinance a home. I have gone to the web page gorman-gorman.com, and I'm clicking on the Learning Center, and if you scroll down, there's a couple great tools here, and where we're going to go is right here to the cost of waiting to finance. But there's also another great tool that is called What Makes Interest Rates Go Up and Down, and I actually encourage you to visit that, and it's a quick video that explains how interest rates are determined on a day-to-day basis. And what we have to keep in mind is that the Federal Reserve nor the U.S. government either actually control home loan rates. They're actually dictated by mortgage-backed securities, and this video will explain that in more detail to you. But here at the cost of waiting to finance is what I want to highlight right now, which is this graph. It's a chart that shows the difference in monthly payment, which is the second column, and then the total interest paid over the life of the loan, which is the fourth column. And as you can see, if you're waiting on rates to go lower, or you're just not taking advantage of the current rate environment, it's actually a risky game to play. This graph shows the effect that interest rates bear on monthly and total interest paid over the life of a loan, and this is a scenario for a loan of $200,000 on a conventional 30-year fixed mortgage. Every 0.25% difference in rate equates to about $30 a month extra in payments, and that's just the short-term effect. Over the life of the loan, every 0.25 point difference equates to about $10,000 in interest paid. Real quick, if you look at 4.75% and then also 5.5%, both, as you saw in the graph before, are historically great rates to get. But the difference between the two in the monthly payment realm is over $100 in monthly interest. So that would add to your monthly payment. And over the life of the loan, the difference is over $30,000 in total interest paid. I invite you to visit this website, www.gorman-gorman.com, and click on Calculators, which is one of the buttons here at the top of the page. And I invite you to just go in there and play around with these calculators. The amortization calculator will help you compare what you're currently paying on your mortgage versus what may be available for you if you refinance. And then if you're just looking to buy a home and you do not have a mortgage currently, there's a couple great tools here. How much can I borrow? And then the payment calculator. Both will estimate how much your payments could be for specific loan amounts and specific interest rates. Also on this website, you can easily look at what our current interest rates are, and you can actually begin the whole loan process by clicking on Apply Now, and you can do that all at the convenience of your own time. If you have any questions or need any guidance, never hesitate to call your Gorman & Gorman Home Loan Mortgage Banker, and be sure to ask for a free loan analysis which would be customized specifically for you. I thank you for your time.